I'm Don Tapscott.
And I'm Alex Tapscott.
And this is What's on Tap for this week. Alex, a lot going on as usual. Let's start with protocols. Tendermint has joined the Blockchain Research Institute. They have a relationship with Cosmos, the platform that has a token called an atom. And by the way, that value of that token has kind of skyrocketed in the last week. I'm sure directly related to their joining the BRI, no doubt. But seriously, could you explain the relationship between these things and what's going on with this protocol?
Yeah, it's worth explaining in a little bit of detail. So Tendermint is the name of a company. Tendermint is also the name of a consensus algorithm. So basically a way in which a blockchain works, in effect. We know about Bitcoin's proof of work consensus mechanism. Tendermint is a form of a proof of stake consensus mechanism. And actually Tendermint, the consensus mechanism and the underlying tech is pervasive across many different blockchains. It's used by a number of very high profile projects. Including ones that are actually larger than Cosmos in size. I think the value of all of the projects that are secured in effect by Tendermint's consensus mechanism is around $100 billion, which is very, very large. Tendermint, so that's Tendermint's background and the tech. Tendermint, the company, acts more as an accelerator of projects that are built inside of the Cosmos ecosystem. So why are we talking about this on the podcast? Well, Cosmos is a top 20 protocol by market value. It probably underrepresents the amount of influence that the technology behind Cosmos has across different blockchain platforms. It's widely used in stablecoin projects like Terra Luna, in governance projects, in decentralized exchanges like Osmosis and others, and really across the whole blockchain ecosystem. And we're really beginning to see enterprises looking at these public protocols, especially ones like Cosmos, as a way to connect into different kinds of applications. So one of the benefits of Cosmos, along with other projects, I should add, like Polkadot, is the ability to interconnect and interoperate. So the fact that Tendermint has joined the BRI is really exciting for me, because I think it shows that there are more and more protocols and more companies directly in that space that want to gain access to and exposure to the enterprise suite of companies. And I think that, for the enterprise members of the BRI and other large businesses, the time has come to embrace public blockchains. It doesn't mean Cosmos specifically. I just mean projects like Cosmos and Ethereum and Polkadot and all these other platforms, because that's really where the rubber is hitting the road. So I think it's just a good sign of another step forward in the evolution of blockchain for the enterprise. And I think Tendermint as an organization has tons of expertise that can contribute back to the BRI, just as the BRI will be able to help Tendermint as well.
All right. And Cosmos itself is called, they refer to themselves as the Internet of Blockchains. And we mentioned this in the last podcast, that we published a report comparing Polkadot to Cosmos, because they're both attempting to do similar things using different techniques and with a different client base and different impact in the enterprise. That paper was for members only, but one of our members, it appears, decided to share that with some other people. It's now out in the public domain. So we've released it to the public. It's at blockchainresearchinstitute.org if anybody's interested. And I think the point you make about public sort of platforms versus private ones has an analogy. If you go back to the early days of the internet, no one wanted to go on the public internet, enterprises that is, because the internet was full of crime and porn, and it was insecure, and all kinds of bad things were happening out there. Mm-hmm. So they built intranets, which were really private intranets. And it's not a perfect analogy, but that's kind of what we have today. that we have these public protocols that are different from the internet. The internet is a vast network of similar networks, whereas today we have a number of platforms and protocols that are different, that don't interconnect. Over time, they will, and over time, I have no doubt that this will move. The whole thing will migrate to an environment where companies are using a public infrastructure. Now, that doesn't mean that they won't have permission networks. You can still do that on a public network. And, if you're a bank, it's kind of understandable that you might create a network that you only want your customers to use. And that's
fine. Yeah, I completely agree. I mean, if you look at right now what's happening in the NFT space, for example, so, a certain project will launch on Ethereum and it will gain a lot of popularity. And then you'll see copycat versions of it popping up on other platforms like Solana and others. Now, that's not a knock against Solana. I think Solana is great. But you're starting to see that sort of, well, if it can happen here, it can happen there. And I think what the promise of interoperability is that, that those assets are composable, that they can be moved, and transferred across different kinds of platforms. So you don't get that sort of duplicative effort. It's sort of like, the different mediums for content. You probably bought a Betamax version of, Back to the Future, and then you bought a VHS version of Back to the Future, then you bought the DVD version of Back to the Future, and then you streamed Back to the Future. And then, it's like, there's the promise of blockchains to be able to move, assets of value across different platforms seamlessly, and for them to interoperate in those different systems. And that doesn't just apply to, cartoon apes and other, NFT projects. It should apply to stocks and bonds and titles and deeds and votes and, other financial assets, money and so forth. And that's, where we're going, by the way, as this continues to knit more closely together. One of the big sort of opportunities with blockchains is around governance. And we've actually spoken a little bit about this. Well, you've written about this for many years, which is, why does the firm exist? And Ronald Coase, why do we organize capability in this, this cultural artifact called the firm? And you've talked about how Coase uses transaction costs as a way to think about that, and how technology could lower transaction costs and allow us to rethink how we organize capability, how we, govern complex systems. Do you want to talk a little bit about that? Because I hear you giving a speech today, Wednesday, September 15th, to an audience of 50,000 people about governance. So that's pretty cool.
Yeah, I'm actually recording the speech today, and it will be given soon to an event. It's the big Cardano event. And Cardano is a platform, of course, the protocol. It's the third largest. And they've just introduced their smart contract, which kind of, from a functionality point of view, setting aside a market value point of view, does put them back into the real key players in terms of enterprise use of blockchains. And Charles Hoskinson is the founder, one of the originators of Ethereum, is quite convinced that there are big problems with our models of governance and decentralized businesses and protocols today. And he's developed this idea called the DCF, Decentralized Consortium Funding. And that's a subset of the broader issue of how do we govern or steward blockchain resources. And the idea is that if you think about it, it's a big deal. Over the years, we've developed a whole body of knowledge called management science. And the body of knowledge refers to a certain view of what is the key institution of wealth creation and of organizing human innovation in society, and that's called the corporation. And the corporation over the years has had a number of characteristics. It began being a vertically integrated corporation. Henry Ford had, within the boundaries of the corporation, a steel plant, a shipping company, a glass factory, a bank, in mahogany forests in Honduras to get the wood, because the costs of transactions in an open market were way greater than the costs of doing things inside the boundaries of a corporation. And the corporation is also something that's hierarchical, and at the top is the supreme governor. And everybody else, sort of other managers, alternate between governed and governors. And then, of course, you have the board and the shareholders that run things. This is the way that we govern and manage wealth. And now, all of a sudden, we have these new decentralized business models. And Exhibit A of these things is protocols and platforms. Yeah. And the way that they've been, sorry?
I just was agreeing with you. Absolutely.
And the way that these things have been funded is largely through ICOs. But if you actually look at ICOs, a majority of them failed in actually raising the money required. And then only a small percent of those went on to build a successful, a viable platform. And so, and there are lots of reasons for that. I mean, some of them were fraud. And never intended to build a platform. But the biggest problems have to do with how do you allocate funds once you raise some money, and which is why Charles is focused on this issue of decentralized consortium funding, and if you look at the big picture, how does that fit in? Well, there's the issue of how do you fund these things, and then how do you decide how the money's going to be used, to effective use of the funding to achieve the strategic objectives of the initiative. Yeah. But also, could you build a program sort of execution machine with built-in governance components that would help with this, that would mitigate power and concentration of online capabilities that are adopted over time? And then ultimately, this is not just about protocols, it's about governance of decentralized business models altogether. The DAO, the decentralized autonomous organization, famously of a few years ago being an example of that. And so this is a pretty juicy topic. And at the BRI, we've been working with the Boston Consulting Group to develop a whole new theory of governance around this idea of DCF. Yeah. And it's going to be introduced at the big Cardano event. It was 50,000 people a couple of weeks ago. I suspect it's bigger than that. So this is larger than my typical speech. And it's in the virtual world, it's kind of crazy because I've given some talks to big audiences in the physical world, but they've never been 50,000 people.
Yeah, 50,000 people. That's 2.5 times the size of Madison Square Garden. That's pretty big.
Yeah. So I'm very much looking forward to it. And the status of this whole thing is that this paper, an early draft has been released, and the BRI is working on another draft that's going to be a more management-oriented piece than the original piece, which was very technical. Yeah. And that will be distributed broadly for comment. And that's pretty much all I can say right now. But if people want to know more about this topic, they can register for the Cardano event. The parent company is called IOHK.
Yeah, sounds great. We should include a link in the description of this week's What's on Tap, so everyone can sign up easily for that. Yeah. This whole question of governance ties into new models for organizing and coordinating value, and the concept of a DAO is very important in that. We wrote an opinion piece together after the DAO was sort of reaching its apex about how distributed autonomous organizations could fix some problems with the traditional company, specifically around this question of moral hazard, right? So that occurs when the interests of management are not aligned with the interests of all stakeholders. And that's something that has happened repeatedly. An example was during the financial crisis. You had executives inside of investment banks that were more concerned about their next bonus than about the value and integrity and the legal standing of the business that they were actually managing, right? And so maybe DAOs could be a way to align incentives more clearly to ensure a better form of governance. The counterpoint to that is that you actually need managers. This is sort of the conclusion that DAOs have raised. There are many DAOs today. Actually, if you look at a lot of these DeFi protocols like Uniswap, Uniswap has a $10 billion treasury. That treasury is not controlled by anyone. It's controlled by a DAO. And that, is kind of eye-opening, because we talked about the DAO in 2016 being so big at $160 million. This thing is 50 times the size, and nobody even knows it exists. Actually, we're doing the analysis, and it turns out that Uniswap's treasury is twice the size of Coinbase's cash balance, which is a gigantic public company. So it's just amazing how quickly these things have grown. But one of the issues that you see with DAOs is basically voter apathy, kind of the same thing you see in a lot of other governance systems, right? How do you encourage coin holders who are stakeholders, they control the governance tokens of projects like Uniswap, to actually vote on key measures? And in the end, you get so little participation that a handful of very large whales, big holders, end up kind of governing the system, not unlike a lot of other systems where a number of large and wealthy individuals control the outcome of certain systems. So there's definitely lots of promise in DAOs, and there's also a lot that needs to be sorted out. I actually recorded a podcast yesterday, DeFi Decoded, which I co-host with Andrew Young, who's a colleague. And his solution through his project, the SX Network, is basically to use prediction markets as a governance mechanism. So in essence, you would be making a bet on whether or not a proposal would get approved. And that creates a financial incentive for you to vote the way you really want it to go, right? You are voting in a way that you hope will not only advance the interest of the thing you own a piece of, but you'll also make some money from the outcome as well. So, people respond to incentives, and maybe that's one way to encourage greater participation in the DAO process. The SX network, I should add, is a really interesting project that people should take a look at if they're interested in prediction markets and how that could impact financial services.
Very cool. We have a hard stop in 4 minutes. Give me a minute to do our announcements. But prior to that, Alex, this whole issue has to do with digital assets, as you said. And you'll remember in Blockchain Revolution, we developed a taxonomy of digital assets.
Yeah.
And we're now in the process of reworking that. And a big new one is governance tokens. You want to just take a second on that?
Yeah, I think governance tokens are sort of an evolution of what we used to call utility tokens. But basically, if you think about a decentralized application, like Uniswap, a decentralized exchange, as an early user of Uniswap, you would earn tokens native tokens for Uniswap, which are called Uni. And at the time when you were just starting out, if you were very, very early, you'd get lots of tokens and they weren't worth particularly that much. Kind of like being an early adopter to Bitcoin, right? You got a lot of Bitcoins, they weren't worth that much. But the more value you add to the system, and in the case of Uniswap, it's by pledging some of your money to the system to create more liquidity. It's called liquidity provisioning. You would earn more and more tokens. So in a way, this system of providing tokens is like a way to sort of bootstrap a network and to encourage early participation. But now we fast forward, a couple of years, and a lot of the early adopters of Uniswap are big holders of the native token Uni. And the Uni token is a governance token. It's a token that gives you control, or say, I should say, over the outcome of decisions that are put to the network, right? So it's not there's no CEO management team that is deciding on behalf of shareholders whether or not to do X, Y, and Z. It's something that goes to a vote that the DAO effectively votes on, and you're effectively a token holder in that DAO as a uni holder. And as I mentioned, there's this very large treasury that the Uniswap protocol controls, and it's not, again, not like controlled by a bank, or inside of a corporation. This is something that is on-chain treasury, and that is, if you think about a $10 billion war chest, I mean, that is massive. There are a few companies in the world that have $10 billion of cash lying around. So these have become very powerful entities. And as a governance token holder, you have a stake in the outcome of how these protocols grow, what they do, and so forth. So, there are some similarities, I won't deny it, to being a shareholder in a company. If you think about, that you as a stakeholder can vote. But it's not like a company in the sense that this isn't a private organization. There's no management team. There's no CEO. There's no board of directors. This is a piece of software that controls money. And so it's a very mind-bending kind of idea that challenges a lot of our assumptions about everything, pretty much. So, yeah, it's interesting. So you've got some announcements that you wanted to make just to wrap it up.
Right. Platform Revolution, new book. I've edited it. Some of the best of the BRI comes out November 1st, and you can pre-order it on Amazon now. And at this oil and gas conference I was at yesterday, I mentioned the book, and later the post said, "Who's ordered Platform Revolution?" And about 2/3 of the audience put up their hand. It was pretty cool. We'll be hosting a webinar on October 1st about the U.S. infrastructure bill, featuring Pierre-Ann Boring from the Digital Chamber of Commerce. For What's on Tap, we're going to have Rob Carter, the legendary CIO of FedEx. That'll be coming up in a couple of weeks. Cool. Also, our big event, Blockchain for the Enterprise, we had hoped to do it in November, and with the pandemic and uncertainty around that, we decided to heck with it. We're going to hold a real major global face-to-face event. And to do that with certainty, we've moved it to April 21st, 22nd, 2020. Get your black tie out for
2022.
I say 2020, 2022. I get your black tie out for that. But the Enterprise Blockchain Awards, we're going to go ahead on November 16th, again, using holograms as a virtual event. And Angie Lau, the CEO and founder of Forecast News, is going to be hosting that from Hong Kong. And we're going to be beaming her onto the stage with me and Alex for that event. So you don't want to miss that. This technology is just crazy. It comes from a company called Art Medium. So that's it for What's on Tap this week.
Sounds good.
Same time, same place next week. So long.
All right. Bye, everybody.